The RBA actually did make their decision today. They held the cash rate, which is no surprise to pretty much anyone. But it was quite interesting. They said both the headline and trimmed mean inflation were within the 2-3% range. And there's a bit of volatility there. But actually, interesting, inflation is a bit higher perhaps than expected at the time of the August statement. I thought that was quite interesting. The private demand is recovering. In other words, household consumption is perhaps rising a little, and maybe because real incomes are rising, although I'm skeptical about that across the board. Housing market, they say, is strengthening, a sign that recent interest rate decreases are having an effect. So they almost are celebrating the fact that prices are rising, which is quite surprising. Credit's readily available to both households and businesses. Not small businesses. My small business survey suggests a lot of people are struggling still. Growth in employment has slowed slightly, but it's still 4.2%. Wages growth has eased from its peak, but productivity growth has been weak and growth in unit labour cost remains high. So that's sort of a starting point. And by the way, just highlighting this is actually the wage price index, but also the newly approved EBAs, the enterprise bargaining agreements, and they're rising. And I think that's a very significant forward indicator of potentially more inflation ahead. And I've got this basic view that inflation is probably more well wedded in than a lot of people would think. They went on to say that there are uncertainties about the outlook. On the domestic side, strong unexpected data on growth and inflation may indicate households have become more comfortable consuming as real incomes and wealth rise. Alternatively, growth in consumption might not persist if households become more concerned about overseas developments or indeed inflation. Uncertainty in the global economy remains elevated, and there's also the question of the lag effect. How long does it take for the 3 rate cuts to work through? That's still an unknown question. It's also worth just taking this on board that, of course, Australia ranks among the worst for productivity growth, and the RBA again mentioned productivity. Mexico's worse, but pretty much everyone else is better than us. This is according to the OECD analysis. Now, okay, they did actually adjust it to purchasing power in the US when they did this, which makes it worse. But nevertheless, the truth is that unit labour costs rose by more than 4.4%, and that's a problem in terms of actually productivity. So their conclusion was that they are going to wait and see, cautious. We're going to talk about heightened uncertainty in the outlook. But actually, my take was that there was probably more expectation for rates to stay rather than necessarily drop. And the risk to inflation on the upside is also probably higher than it was previously.